please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Good morning and welcome to Bazaar Morning Call. I am Anuj, with me Sonia and Surabhi. We brace ourselves for a bit of a tough start because the way Asian markets this morning are reacting, it looks like the opening could be tough. Also on ICICI Bank, we haven't really got too much of follow-through news, so perhaps that rally could also be petering out today. So all in all, looks like we'll have a soft start. That's what the SGX Nifty is indicating. Let's see where we move from here. Good morning, both of you.
Hi, good morning.
Hi, good morning,
Surabhi. It is actually global news that could take center stage this morning, right? I mean, Hong Kong is down almost 650 points. And I was just looking at some notes across the globe. Apparently, the Dow futures have also fallen more than 120 points. So there could be a scare globally. As we know, trade tensions are rising. Trump has imposed Chinese tariffs on almost $200 billion worth of goods. And there is sort of a retaliation coming back from China as well. Do you think this could be the key focus for our markets today?
Sonia, the day call is very tough to make in this market. As we've seen, the market's been in a range for some time now. I think for the last 3 or 4 months, my broad thesis has been this is the year of developed markets outperforming emerging markets. And what is really interesting is if you look at the internals of US market and you compare that to the internals of our market. In US market, the S&P 500 this year is up 3%. The Russell 2000 index, which is basically tracking the global markets in the US, the mid-cap stock sort of the US, is up 10% this year. And this is on top of a big rally that they've seen already last year, post and after election of Trump. You see what's India done. The Nifty is up 2.5%, so which is in line with what the S&P 500 done. Mid-cap index is down 11%, small-cap index even more. So obviously the first theme is that there is a broader market underperformance and portfolios are obviously bleeding a bit. Also what is interesting is if you see the MSCI indices this year, Asia ex-Japan is flat. Emerging market is down 3.4%, and that's because of what's been happening with currency and commodities in especially Brazilian and a couple of other markets. And India is down 6% purely because of currency. So what has happened is that macro issues have come back to haunt the markets, especially the emerging markets.
And India has underperformed Asia ex-Japan, emerging markets, developed markets, everything this year.
Yes, we are, I think, 40th or 41st out of the 50 top emerging markets. The issue here is for the near term, the market has shown signs that it's tested the higher end of the range. Now perhaps it wants to test the lower end of the range. The near-term range is 10,780 to 10,840. Let's see if that gets broken today conclusively, because we've gone to 10,760 and bounced back. That's 40. Let's see if that gets broken today conclusively, because we've gone to 10,760 and bounced back. That's not helping much. So let's see if we break this range conclusively. On the Bank Nifty, the range is 26,300 to 26,500. Good chance that perhaps we break that range on the downside, at least for today. I think the key stock to watch, apart from ICICI Bank, is HDFC Bank, because that is really the 35% weight on the Bank Nifty. We know that the QIP is pending there. It's been a bit soft. Is it a precursor to a profit taking or decline in HDFC Bank, or perhaps the next phase of rally in HDFC Bank? I think that really could be decisive. Also, Reliance has been making new highs. So in some senses, the Nifty has got legs of support. So it's tough to see the Nifty break down, unless of course there's a complete breakdown in global markets. It's tough to see the market break down. But in individual stocks, obviously, there's going to be a bit of a problem today.
Well, morning, Anuj. Yeah, Reliance today, there's a positive call from CLSA as well coming in. A little late, perhaps, because the stock is already above 1,000. Just to go back to Asia, before I talk about ICICI Bank, Anuj, the SGX futures are also down. They're down a little over 0.5%. The Hong Kong market's down over 2%, and there is a bit of a risk-off that's underway. The yen is a key barometer of that risk-off, and the yen is now trading below 110 to the dollar. So let's see how much of this really plays out. Just a point on the SGX Nifty. Earlier this contract, we remember the fight that's been going on between the Indian forces and the SGX. Earlier this contract was to expire in August. That's not happening now. There is an arbitration underway. And yesterday, the NSE clarified that the arbitration outcome is expected by February of 2019. And until then, SGX can't launch any new India products for people who are trading the India contract out of Singapore. The current contract continues. In fact, it continues for 2 months after the final arbitration award. So even after March, April, that's the timeline right now. So this contract, short point, is very much valid. It is the one way of playing India for a lot of the foreign investors out there. So let's keep an eye out on that index, down about 60 points right now. Anuj, the question to you on the market and on ICICI Bank, if this is how global cues play out, A, could we actually get a decisive breakdown of that range that we've been talking about? And B, ICICI Bank played its part in holding up the market yesterday, right? It prevented a breakdown. So how does this equation play out today?
Yeah, I think on ICICI Bank first, Surabhi, I think it's a bit of a damn squib because, yesterday we thought that, you'll have a clean play. That, okay, you have a new interim CEO. Your COO who continues to report to Chanda Kochhar, and Chanda Kochhar has now gone on leave. The jury is out on whether, she'll get clean chit or not. So uncertainty continues, and the market does not like that. The reason ICICI Bank has been in a range, if you see the chart of ICICI Bank as well, and sometimes, charts have a habit of preempting these moves. It's gone to 260, 270 2 or 3 times, and every time it's bounced back because at 260, 270 it really goes to rock bottom in terms of its valuations. But is there enough trigger for it to break out and go past, say, 300, 310? That I think is not likely. So there's a good chance that this trading range that is there now on ICICI Bank extends for a bit. About 260 to 310 is the range that we've been talking about. So a bit of a damp squib for me on ICICI Bank, and the trading range set to extend for some time. On the market, well, let's wait for this breakdown. If it has to be, because just looking at Hang Seng, it hasn't worked in the past. It's not one-to-one correlation. So let's see.
Okay, also there are a lot of unanswered questions, right? I mean, Morgan Stanley writes in their note that Ms. Kochhar's term is up for renewal in early 2019, and what needs to be seen is whether she opts or gets reappointed as a CEO. There's no clarity on that just yet. So let's see how things progress. For now, we have a lot of reactions coming through, actually. So we'll go straight to them. Before that, let's tell you what our wise experts have to say as we head into trade this morning. Vinod Karki of ICICI Securities says Indian equities have delivered muted returns in 2018 so far, while mid and small cap stocks have significantly underperformed. He says despite the overall underperformance of equities, stocks with improved earnings growth visibility have been hitting all-time highs on price and valuations. In this environment, he says they turn their attention to companies that have underperformed significantly but have shown an evidence of producing sustainable earnings and a stable outlook, and stocks fitting this criteria. In their coverage universe, these stocks are Cummins India, Bharat Electronics, Mahanagar Gas, Engineers India, TTK Prestige, Cera Sanitaryware and Indraprastha Gas. Vinod says unrated companies that fit the above criteria are Dhanuka Agritech, ESAB India, Kirloskar Oil, Gabriel India, Tide Water Oil, La Opala, Sri Kalahasti and Balaji Amines.
Okay, that's an interesting way to play the market. Let's get you some money market views as well. Bhaskar Panda of HDFC Bank says the US-China trade war is spilling into currency and bond trading due to change in sentiment. Risk off and dollar rally is the essence of the market right now. As a result, he adds, EM currencies including INR have been under pressure. He expects the dollar rupee to trade around $68 pivot today, in a range between 67.95 to 68.50.
And on the bonds, Bhaskar Panda says the US bond yields are up and global crude prices have eased a bit. He adds the MPC minutes are also due this week, and given this background, he expects the 10-year benchmark bond yield to remain within the 7.85 to 7.92% range.
Plenty of headlines from those trade wars. Let's go across to Nigel for the world view.
Well, the U.S. markets ended in the red yesterday. In fact, the Dow's on a 5-session losing streak. In yesterday's trading session, we did have the top losers. There were Intel, Procter & Gamble, as well as Merck. All of them were on the losing end. Remember, the problem really has been the lingering U.S.-China trade war commentary that we have been getting out of there. The European markets as well didn't do that great. We saw all the three frontliners ending in the red. The FTSE was a relative outperformer because that ended as flat as can be. We had some economic data coming out of there. The British Chamber of Commerce, they said that the United Kingdom is on track to grow at its weakest pace since 2009. Key reason of there will be Brexit and also the Italian trade balance. That did see a bit of a contraction if you take a look at those data points as well. Well, Volkswagen was a stock in focus that was down close to around 3% after Audi CEO was arrested in the emission cheating scandal. So that stock really did dent sentiment. Emerging markets continue to be under pressure. The Brazilian index now is below 70,000 odd. Remember, earlier this year, it was more than 86,000. So it's corrected nearly around 20% from that peak. Russian index as well did see selling pressure. The big headline this morning is that the Chinese are saying if Donald Trump is going to play hardball, well, we're on for it. They have vowed to fight back against these additional tariffs, and that explains why the Asian markets are in a bit of a tizzy. The Shanghai market's under pressure. Now it's below that 3,000 odd mark, so it's corrected more than 20% from the highs this year. The Hang Seng as well is under some pressure. Brent crude prices have moved back towards $75 per barrel. So not a great start is what we can expect. SGX Nifty suggesting a near 60-point downtick. Back to you all.
Okay, Nigel, thanks a lot for that. So 60-point down is what we have on the SGX Nifty. Let's get back to the big story then, the big shake-up at ICICI Bank. Ajay Srivastav, CEO of Dimensions Corporate Finance Services, now joins us on the phone line. Ajay, good morning. Your thoughts on what transpired? You think it's an honorable exit given to Chanda Kochhar, or you think there's still uncertainty now and that could drag the stock, considering that it had a big rally yesterday?
Good morning. I think two things are happening here. One is, I think if Chanda Kochhar finally leaves, the position of the chairman of ICICI Bank becomes totally untenable because he's the one who came out to support. So I'm not sure whether the whole arrangement has been done in a manner to ensure that let some time pass, let the heat get off, let some regulatory decision come, otherwise bring her back. Number two is, if I had not known Sandeep, I had known him from times at ICICI in Delhi, so I know him personally. He's an excellent guy. If I had not known him personally, I would have said insider again on the top is going to be not help the inquiry. But I think you've got a balanced guy who's a CEO. He should hold the reins of the company. So to that extent, they've done a decent job of bringing in a good guy to run this bank. And I sincerely believe that if this arrangement becomes final, you would see the ICICI Bank stock doing a lot better because Sandeep has done a good job with wherever he's gone, with Lombard, with the insurance company. He can do a tremendously good job with the bank. So, so there is a negative with the way the whole thing has panned out. The positive is a good guy at the helm. And I think if this guy continues, you could see ICICI doing seriously well in the market.
Ajay, hi, good morning. It's good you put that perspective on board because not many of us know him. I mean, of course, we know the background that he comes from, but don't know him personally. So it's good to get that viewpoint. But, coming back to the question that Anuj was asking, there is still a lot of management uncertainty, right? Because Chanda Kochhar's term is up for renewal in early 2019 and nobody knows which way that could go. Do you think up until then ICICI Bank could underperform its peers?
No, I think, Sonia, contrary to that, I believe that this will lead to one of the breakouts because two things are going to happen in the next quarter. One, a lot of cleaning up will happen. Second thing is, now there is no more worry about the external pressure. Now the people can go back to business. People can start doing the normal work, taking the normal decisions, with the CEO in place, reporting to the board. So earlier, you could be wondering, am I taking a decision? Will it be out wrong, right? Chanda Kochhar's position, my boss's position is untenable. But now at least clarity is there's a 5-year CEO in place. So they know that they can be supported or will be supported. They can implement policy. I think it's a great move and we believe strongly that this should lead to a breakout of this stock from the range that it has been earlier. And, it's just a question of how much independence Sandeep gets to work with apart from the board supervision. If he does, I think it's a great decision because uncertainty is out. The 5-year window of confirmed position of a head is in place. So lots of stability factors come into place in an environment which is very challenging because let's not understand, banking industry is going through the biggest challenge of getting deposits. Not many people don't know how bad it's become in the market. Deposits are falling. Banks are calling up customers day in and day out saying, give us some deposits. So it's a very challenging environment. I think stability of top management is a good thing for ICICI Bank. But I'm not sure if the continuance of the present chairman is a good thing because I think that's the person who needs to go to give it a complete new flavor to the organization.
Ajay, good morning. I completely see your point and I kind of agree with that because look, either ways, if there's no wrongdoing, she comes back and then sort of that perhaps can be an all clear. And if there is a problem and if she does need to go, then you, as you're saying, you have a great guy at the top now. So therefore, if this is going to be a clear breakout above 300, and we know the valuation metrics, we know the huge skew towards other private sector banks like Kotak, the HDFCs of the world, how big can the rally be? And I'm not talking 2-3 days, now I'm talking for the next 6 months to 1 year. Are we looking at a massive move on ICICI Bank? And then what would the view be on the subsidiaries as well?
See, my view is, it's a very aggressive view is that you could even see a 50% increase in share price, provided Mrs. Kochhar doesn't come back. The problem is, as an investor, if she comes back, you're back to the same old thing again, and therefore, as an investor, you lose out. So that's a limited uncertainty. If it is known very clearly that she's not going to come back, and Sandeep and maybe a new MD comes eventually on board or Sandeep gets promoted, I think this stock is rated for a serious re-rating to 30 to 40% increase in the next 6 to 9 months.
Okay, that's interesting. Ajay, we'll discuss some more stocks as well. But since we've got you today, I just wanted your thoughts on the overall market mood as well right now. Today, of course, is not a good day if you look at the global screen. But crude's come off a bit. And there have been some leaders like pharma and IT which have done well. Overall, where do you stand on the market? And you think this is still a good time to be in market, or is it a good time to create to raise some cash levels and then participate if there's a big decline?
See, the market is in a beautiful place, and I think it's a beautiful place because it keeps finding its winners in the market. You had IT was found, pharma took a rebound, you held on to the main caps at this point of time. So, market-wise, very stable. And the best part of the market, broadly when you meet everybody now, the one thing is commonly now accepted, that political fortunes may keep changing for political parties, market dynamics will go along. So the real fear was a political uncertainty event of election, shaking up this market. I think that fear has gone out, and which is what is giving stability to the market. Number two is, should you have cash always? I guess 10 to 20% portfolio cash is good for you because you can take part in lots of opportunities which come on the way. And the market is brilliant. It gives you opportunities. If you look at Page, if you look at iShares, the top gainers, they gave you beautiful opportunities. Not many would know that Page was just 20,000 rupees a stock in the month of March. So market is giving opportunities to people who hoard cash for every correction. And I think that's what you said very correctly. Keep some cash, corrections will come. But I think the index is holding firm and steady. We are finding our winners as we go along.
Okay, well, that's an optimistic note. Ajay, before we let you go, I think it's a season of management changes, because this morning we're getting some reports that Axis Bank may now be considering P. Jayakumar to replace Shikha Sharma. If that indeed happens, I mean, Jayakumar, as we know, his term as a CEO of Bank of Baroda will end in October this year. If that switch takes place, how would you react, and how are you positioned on Axis Bank in general?
I don't have a position in Axis Bank at all, Sonia. I don't think it's a good bank to buy into with. And, now again, I'm, putting in the wrong position because Jakes happens to be an old friend of mine from Citibank. But he's not, his stint at BOB was, I believe, less than impressive. I think there are lots of promises made, but which never happened. Axis Bank is a bigger challenge than even BOB, in my view. So I'm not sure whether after a BOB PSU stint, you walk into a private sector bank is as easy a transition as it can be. So my belief is that Axis Bank is one of the banks which is, I think, up for grabs in terms of a merger. I don't think so. Today it has a leadership, including second and third tier leadership, which can take this bank forward anyway. So as an investor, I don't think any management change is going to give any major changes to investor fortune in this company. Best sold and merged, and you'll get the best money out of it.
All right, Ajay, thank you for your thoughts. And hi, welcome back. Well, this morning is not looking good across the globe. There's definitely trade tensions that have caused a lot of the markets to fall. As we speak, we understand the Dow futures are down more than 200 odd points. It looks like it's going to be an ugly start in the US markets, and Hong Kong is down 600 points right now. But our research team is here to give you the list of top 10 stocks to watch as we head into trade this morning. Anuj, what are you looking at?
So, Sonia, yesterday, as we discussed and as we found out, the proof of pudding is in the eating. Dr. Reddy's, the way it ended yesterday, it started 2% lower, it ended 2% higher. So it jumped 4% from day's low. So basically, you have to now look for strong stocks. And pharma is in a bull market now, and it's the strongest stock in a strong sector. So I'm not saying that go out and buy first thing in the morning, but I'm just trying to put things here that it's a good indication that perhaps now on bad news you will see pharma stocks rally. The other one is Ashok Leyland, and really it's going through one of those phases. It's now broken down with volumes yesterday and within 6% now of the 200-day moving average, and also the post-result low. The 200 DMA is 132. Anecdotally, if you buy Ashok Leyland closer to 200-day moving average, you make a lot of money. But yesterday it was a bit of a breakdown, so let's see if there's any follow-through on that.
Okay, fair enough. Those two stocks on our radar, of course. Let's get to the big one. What else but ICICI Bank? Ritu is rounding up all the action and the details. Ritu.
The suspense is finally over, and it looks like the board has decided to give the benefit of doubt to Chanda Kochar by allowing her to stay on as the managing director and CEO of ICICI Bank. But, the board also said that Chanda Kochar, in line with the highest standards of corporate governance, on her own has decided to go on an indefinite leave, pending, of course, the results of that independent probe committee that will be headed by Justice Sri Krishna. Also, the board, as expected, has appointed Sandeep Bakshi, who is currently the ICICI Pru Life MD and CEO, as a whole-time director and chief operating officer of the bank to oversee all of the operations. So all the executive management and other executive directors will be reporting in to Mr. Sandeep Bakshi, who in turn, according to the statement of the bank, will be reporting to the MD and CEO, and in her absence be reporting to the board of ICICI Bank. Do remember, Sandeep Bakshi is no stranger to banking. He started his career at ICICI Limited in 1983, has overseen both the wholesale and the retail businesses of the bank before heading on, to ICICI Life and his other functions in the group. Also, separately, the board has recommended to the board of ICICI Pru Life to consider the appointment of N.S. Kannan as the MD and CEO of Pru Life in the absence of Mr. Sandeep Bakshi, who will be with the bank for the next 5 years at least. Also, separately, we were expecting some announcement on that independent probe committee as well, but nothing was released by the bank on that front. But we have picked up from sources that the official letter of appointment from ICICI Bank has gone to Mr. Sri Krishna only on Friday, and therefore the probe is yet to begin. He will begin the process of appointing, members of this independent committee that will be looking into allegations against the Videocon group, and it'll comprise of several experts, lawyers, as well as forensic auditors.
Okay, and what are brokerages making of this transition? Let's ask Abhishek.
Well, Anuj, brokerages are happy that a concern over the overhang of succession planning has been taken care of. So, Jeffrey says that they have buy on both ICICI Bank and ICICI Pru with a target price of 380 and 520 respectively. The rotation of roles between ICICI Bank and ICICI Pru is what Jeffrey says. And they wonder as to what circumstances have led to the collapse of three-tier structure to about two structures. So, IDFC Securities on ICICI Bank has an outperformed rating with a target price of 370. They mentioned that Mr. Bakshi has vast experience over both the retail and the corporate portfolio and businesses of ICICI Group. It's a win-win situation for both ICICI Bank and ICICI Pru, and ICICI's board has ensured a smooth transition of succession planning and business continuity while addressing the concerns over the same. Back to you.
Okay, thanks a lot for that. So that's ICICI Bank. It was up 4% yesterday. Let's see how it moves today. But moving on, sources tell us that the Finance Minister Piyush Goyal will be meeting the heads of various public sector banks today. Timsi Jaipuria joins in now to line up that agenda for us. Timsi, hi, good morning.
Yes, as you rightly mentioned, about 11 bankers are going to meet today. 11 banks are going to meet with their chiefs and all, with the Finance Minister today in Delhi. And yes, on the agenda is how best to deal with the challenges that these banks are facing as of now. Now, some of the challenges which are going to be put forward, what sources indicate, are on how to go ahead on the merger. SBI is going to make a detailed presentation. What is the impact of the merger on SBI when it comes to financials, when it comes to the presence of banks across the country, etc. And yes, let's see what is the future course of action that gets decided in the meeting, because for North Block, dealing with the challenges that the banks are facing is the topmost priority right now.
All right, Timsi, thanks very much. That's an important meeting. We'll keep an eye out on that. A lot of financial stocks in the news. The next one is also from the same universe. Abhishek, so HDFC Bank, they can raise up to 24,000 crores thanks to the cabinet approval. What's the plan now?
Well, Surbhi, HDFC Bank will launch the QIP either today or, in this week. And that is post the official communication from the government with regards to the FIPV approval. They have not received the formal communication, so they are waiting for that letter. But the QIP will not have an ADR issuance. So the domestic issuance will have participants from both the FIIs and the domestic institutions. So foreign investors can now participate only via the domestic issuance route and not the ADR route. Back to you.
Okay, Abhishek, thanks a lot for that. Sonal, there's a CLSA price target update on Reliance Industries today.
Well, that's right, Anuj. CLSA has upgraded the target price of the company, has increased it from 1,125 to 1,230. That's a marginal increase, but they're quite positive on the company's prospects. They say that a weaker rupee and higher crude raises the EBITDA up by around 2 to 3%, but higher interest costs will be offsetting this. However, over a period of 3 years, they expect the EBITDA to be rising by around 75% and have a positive stance on the company. Standard disclaimer, Reliance Industries owns and operates CNBC TV18.
All right, thanks a lot for that. Reliance Industries has been hitting new highs day by day, but once again back to banks. Axis Bank is also in focus today, Abhishek.
Well, Sonia, news reports suggest that Axis Bank may be considering PS Jaikumar, who is the current CEO of Bank of Baroda, to replace Shikha Sharma. Now, PS Jaikumar's term in Bank of Baroda ends in October 2018. So, Axis Bank had appointed a committee, that is, Egon Zehnder, to identify the replacement of the CEO. Why they had done this is that RBI has raised red flags over the extension of Shikha Sharma's tenure during the last time that Axis board approved. And Shikha Sharma's otherwise tenure ends in December 2018. Now, we have not verified this report independently and does not vouch for the authenticity of the same.
Okay, thanks a lot. So largely a lot of banks in focus this morning. Here's a quick recap then of our top stocks. Expected to gain today are names like Dr. Reddy's, ICICI Bank, ICICI Pru, SBI, Bank of Baroda, PNB, HDFC Bank, Reliance and Axis Bank. While the lone stock expected to be under pressure this morning is Ashok Leyland. We'll take a quick break on that note, but our technical gurus, Sudarshan Sakhani, Mitesh Thakkar and Prakash Gaba will join us next.